Hey everyone, in this video, I'm going to give you 3 reasons why Altria Group is a great stock coming up right now. If you're not familiar with Altria already, ticker symbol MO trades on the New York Stock Exchange. I'm going to give you a brief overview just so everyone is on the same page right now. So Altria is a tobacco company. They've sold tobacco for over 180 years. They have a number of brands. They sell smokeless tobacco as well as smoked tobacco, and they have investments in other products as well. So let's look at their baseline financials here. We're going to look at a summary of everything. So they're trading at around a 10 times earnings to mark or price to earnings ratio. They have an almost 8% forward dividend yield. They just increased their dividend and a market cap of about 80 billion. So there's some info. Reason number 1 is that Altria is a cash machine. They are a free cash flow machine, an operating cash flow machine, and here's why. So here's a graph. I pulled this off of gurufocus.com. Go check them out if you want to see more graphs like this. So this is their MO's, Altria Group's operating cash flow per share for the trailing 12 months over the past 10 years. So over the past 10 years, they have maintained and actually increased their operating cash flow per share from less than $2 a share to now over $4 a share. So they're increasing their cash flow. A lot of people think that the tobacco industry is dying, it's dead, it's not a good investment. Well, this sort of proves that Altria Group doesn't fit into that mode of thinking, that group of dying tobacco company. I've got another graph coming up here. MO's price to operating cash flow. So this is for every dollar you pay, how many dollars of cash flow are you getting? And if you see here at the bottom, it's a little hard to see. I didn't make this graph. This is Guru Focus. It says 7.84. So that means you're getting a 12.75 operating cash flow yield on your investment. So you should be making around 12.75% on the stock. And that is that's including the dividend and everything. This is where real returns come from, is cash flow yield. So you can see that the business is trading at a huge discount to its historical cash flow, price to cash flow. We'd expect it to be trading at least above 10 price to cash flow, but not right now. And a 10 price to cash flow would be a 10% cash flow yield. So this is still a great investment if you even think that Altria is going to last the next 20 years, which I'm going to tell you why they will. So here's their earnings, Altria's earnings, and you see that they actually maintained their earnings through the course of the pandemic, and they're estimated to have their earnings stay relatively flat over the course of the next year. So this is key. This is a very defensive stock. People call them the sin stocks. They're defensive because people still go out and smoke. They still go out and drink even when there's a recession or pandemic. And this is proven here because their earnings have been untouched from quarter 4 to quarter 1 to quarter 2. They've just been kept going along. Here's Altria making money, but their stock price did not reflect that. Their stock price crashed. And that's what you're looking for and invest in, where the market is misrepresenting the actual risk of a business. So they're saying this business is super risky, but in actuality, you can see here, not that much risk. Not that much risk. All right, reason number 2, they have massive investments. So what does this mean? So here are their operating companies at the top. Philip Morris, they've got a wine company, smokeless tobacco company, and just general normal tobacco operations in general besides the wine company. And the wine company is a very small proportion of their actual gross revenue. So right now I'm talking about their strategic investments in 3 businesses: AB InBev, Anheuser-Busch, Juul, and Kronos Group. So these are 3 very unique investments, but actually, when you think about them, work very well for Altria in the grand scheme of things. So, and one other one here, Helix at the bottom, Helix Innovation. That company does tobacco pouches. So instead of chewing tobacco, where it's traditionally you take it out of a little can, put it under your lip, and it's kind of gross. Helix is more of a pouch style. So they're experimenting with that. So we're going to look at these three companies. There's three strategic investments in more depth right now. So AB InBev. Altria owns 10.2% of AB InBev. They are the largest brewer in the world. So they have operations all over the world. And this is a component of things that you might not exactly be thinking of. They're the largest brewer, so they have a market cap of $118 billion. They have a lot of non-US dollar currency coming into the company. So as you might know, the US dollar, the DXY, that index has been crashing recently. The US dollar is not doing well. AB InBev actually is very strengthened by a weak US dollar. So this is a good tailwind for Altria in their investment here. So they have a 10% ownership. AB InBev actually also issues a dividend of a little over 2%. So that's good. And this is another sin stock, the alcohol play. Here we have a lot of cash flowing sin stocks really take a downturn in market price during recession, but in the end, they aren't actually all that affected in their underlying business. So I think this is a great investment and is probably even undervalued at $118 billion. I think Altria has a good stake here. So next company is Juul Labs. So Juul Labs, Altria owns 35% of Juul. They have an investment in 35% of Juul. It's 35% of the economic profits. They don't actually have controlling ownership of Juul. And Juul's being valued at right now around $12 billion. $12 billion is what Juul's being valued at. So this is a good hedge against possibly declining tobacco profits in terms of smoked tobacco, smoked leaf tobacco. This is a e-cigarette version of the nicotine that a lot of younger people are transitioning to and might even help people get off more harmful cigarettes. So that is why they have a massive investment in Juul. It's like a hedge against declining e-cigarette consumption, declining tobacco consumption. So what's their last investment here? We have Kronos Group. They own a 45% stake in Kronos Group. They have a $2 billion market cap currently, and they are a large cannabis producer. And they aren't just a medical producer. I think they actually produce for recreational purposes as well. And they own a 45% interest in this. So this is an enterprising company who's likely to increase dramatically in value over the next years and months to come. So this is a good long-term holding for Altria. Now let's look. I made this spreadsheet here. We can see this is Altria's value in terms of their investments. So their market cap is around $80 billion. We subtract out their three investments. The Anheuser-Busch investment is $10 billion, and I'd like to point out that that actually equates to 1/8 of their total market cap could be accounted for in their Anheuser-Busch InBev stake. So that's really interesting. Their Juul Labs investment is $4 billion approximately. So that on top of it adds another layer to their investment market cap, and then their Kronos Group investment, which is currently less than $1 billion. So when you add these all together, it subtracts out to be the Altria's underlying business. Their operating companies are only $66 billion of market cap, and when we take that for their forward price earnings, that's about a forward price earnings of 9, a little less than 9, and this is a really conservative number here. And their operating businesses are selling for about $35 per share. So this is really interesting. You're getting a great business selling at 9 times earning that's profitable and a free cash flow machine. And they have these investments for the future that are hedging them against possible declining tobacco use. So this looks like an amazing option for me in their investments. So let's look at the next point here. return of capital. This is point number 3. So this is their 55th dividend increase in the last 51 years. So they're a certified dividend aristocrat, they call them these days. They've recently just increased their dividend 2.4%. So it's actually yielding pretty much 8% right now. An 8% dividend yield on this company seems pretty awesome to me, but I don't know, that's just me. You can see here that they've increased dividends many times over the years since 2008, and that just looks great. So they're returning shareholder capital in the form of dividends primarily. And here we see the number of shares fully diluted of Altria. So we can see here over their lifetime, they've actually been decreasing their total shares outstanding. And you can see in the past 10 years or so, they have actually participated in pretty large share buybacks. So that's where a company will buy back their own shares, reducing their total number of shares outstanding. So the profits of the company are divided up in a smaller number of shares. So it actually will increase earnings per share over time if earnings are constant or they go up. So this is really interesting too, to just think about the fact that they have shareholders' interests at heart. They're returning money to shareholders in 2 forms primarily, in the form of dividends and in the form of share buybacks. So I think based on these 2 things, and here we can see, based on these 2 things, it's going to be a great investment. Here we see the number of share repurchases in billions over time. So they peaked in around 2017, but they're still buying back a nice number of shares every year. And this money in 2019, because their stock price has been going down like we saw on that chart, it's actually a better bang for the buck. So that's why I think Altria, their management team, is actually doing a great job of giving the money to the shareholders, getting it out of the business into the shareholders' hands. Thank you for watching. This is a roundup of what I think of Altria Stock, ticker symbol MO. Tell me what you think in the comments. Do you agree with me? Do you disagree? And subscribe if you want to see more informative content like this. And give it a like. Thanks.